Buyers won't buy, homeowners won't list. The weekly average mortgage rate dropped below 6% for the first time in 3.5 years. And that should have unlocked this frozen housing market, but it didn't. It didn't. Pending sales now down 2.8% versus last year. So we're still lagging in home buyer demand. And then what's worse, if I look at new listings, they're still down compared to last year. So fewer people putting their homes on the market compared to last year, fewer people buying homes compared to last year. And then if you look at this stat, which is even more startling, active inventory. Active inventory of homes for sale still down, now down 2% year over year. You can see this line, folks. It's just not good. You've got basically fewer and fewer homes on the market, not more homes, fewer homes. So fewer buyers, fewer homes on the market. It's definitely a stagflation housing market. At the same time, though, we do have a lot of home price reductions. Check this out. This one's from Housing Wire, and they show that we had about 33% of all listings had a price reduction. And so when you think about 1 million homes on the market right now, right? We've got about 1 million houses, according to Redfin. Housing Wire says we have 33% of all listings have had a price cut. That's about 330,000 homes with a price cut. So that's what we're reviewing today, folks. We're going through all this data, the good, the bad, the ugly. And I want to hear from you what you're seeing in your housing market, because we do this every week on the Housing Nerd. Welcome. My name is Jason Ferrier. I am the Housing Nerd. And I've been a realtor. I've been an investor now in Central Ohio for nearly a decade. So this is your chance to learn about the housing market. What we're going to do first is review the top line data from Redfin and a couple other sources. Then we'll dive into the markets that you want me to review. If you have a zip code that you would like to talk about, or a metro, even a county, then let's do that and review what's happening in your local housing market. And quick disclaimer, I'm not a attorney. I'm not a financial advisor. I'm not an accountant. I'm just a normal dude. I'm a realtor. I'm a housing nerd. And I like showing you the housing data and helping you understand what's happening in the housing market. So that's what's going on. Let's get started. Welcome, everybody. Welcome, welcome. And please comment. Let me know. Let me know what's happening in your market. I did put a poll up on the channel on the live stream asking what unlocks more housing supply and demand first. Lower prices, time, low rates, other comment below. So make sure you participate in that poll. If you happen to be watching this on Facebook, I apologize for you having to do that. You should join us on YouTube. But yeah, join us on YouTube. You can participate in the poll, participate in the chat's a lot easier. And here we go. Here we go. All right. Plus, we got that jobs number just now, right? We got that jobs number earlier today, and it was dismal. It was dismal. A lot of revisions to the jobs number before. No surprise there. So at least the data is wrong no matter who's president, right? At least we have that. Inconsistent bad data. All right. Now, oh, by the way, do me a favor. Hit the thumbs up if you join, and share the video while we're on this live stream with someone else. That greatly helps the channel. And make sure you're subscribed. There's a lot of y'all that aren't subscribed to the Housing Nerd, and I don't understand why. It's free and only takes a minute. All right. So let's look at the data. Now, typically what I'll do is review this article from Redfin, but today I'm going to skip down to the data, not the commentary. Um, I think that just means more. So when we look at the top line data of the housing market right now, and this is updated weekly from Redfin, you can see that the weekly 30-year fixed mortgage rate is now under 6%, or was last week, not the daily rate. So if you check right now, the rates today are like 6.13 according to Mortgage News Daily. However, the weekly rate was 6% last week. So on average, right? And that's the lowest level in 3.5 years. Look at that. Lowest level in 3.5 years. I mean, rates are definitely coming down overall, right? And that's down from last year at 6.76%. But we know that pending sales are still low. New listings are still low compared to last year. Active inventory is low. So it's like, man, it's just these lower mortgage rates haven't really unlocked anything, at least not that I can tell. Mortgage purchase applications. Now, those are up 6% from a week earlier. So how many people are actually applying for mortgages? Well, that's up 6% and up 10% from last year. So the lower rates are increasing the number of mortgage applicants, but it's not translating into actual sales yet. Here's something that's interesting, though, is the Google searches for homes for sale is the highest level since July of last year. And it's up 26% year over year. So more people looking for homes online, right? More people going, hey, I want to look at a, house for sale in Ohio or wherever. There are more people doing that than last year. Touring activity. How many people are touring homes? That's up 15% from the start of the year. At this time last year, it was up 25%. So it's almost like there are fewer people touring homes as well. One of the reasons I think that's happening and just the demand is low, and you tell me what you think. I want to know. Maybe I'm nuts, but there's not a lot of homes out there to look at. Like, even if the numbers say that we're up, in your local market, if you're up 10%, 15%, 20% since last year in active inventory, if you're out there looking for a home, you probably are feeling this, and let me know if you are. It's like, man, there's not a lot of great homes on the market. There are definitely some, but overall, it's not like, you have your pick of the litter. And I think that's keeping touring activity low. I also think it's keeping pending sales low. We just need more inventory. We need more people putting their house on the market, but it's just locked up right now. Now, there could be a lot of relisted homes, right? This spring, we could see a lot of these delisted homes come back as relisted homes. By the way, that happens every year. It just became big this year because of memes and stuff. Shout out to John Brooks in Florida, who I think coined that phrase. He should copyright it. But yeah, I think that's what we're running into. A lot of just, sellers not willing to put their house on the market. A lot of them don't need to, right? They're like, I don't need to sell. Why would I? We're going to talk about that more in a minute. But median sale price. Let's look at this. We're going to talk about prices, and this is national look. So prices, demand, supply, all that stuff. And again, we will get to the metros that you want me to look at, the zip code levels. So put those in the chat now. This is more of our national update first. Median sale price, $381,750. That's up 1%. It just refuses to fall underneath last year, meaning home prices, the median home price is still up year over year for the national number. And median is in the middle. That's how Redfin does it. Median is in the middle. It's not an average. It's not the typical home value that Zillow uses, but it's just kind of an overall gauge. That's all it is. The median asking price. I heard somebody on YouTube yesterday say that this was down year over year. They're false. It's up year over year, $414,875. What does that mean? Well, it basically means that people are asking more for their houses than they did this time last year. That's what it means on average. Median monthly mortgage payment. This is pretty startling. $2,591 at a 5.98 rate, which now they're not showing 5.98. It's 6.13 now, but that's down 2.8%. So payments are lower, but buyers haven't ran back into the market. Pending sales. How many homes are going into contract? 75,684. That's down 2.8%. Again, lower than last year. And I had somebody comment and say, it's basically flat. 3% is basically flat. And I'm like, well, depends what you're looking at. But if you're looking at incremental growth or decline, this means something. I mean, it means that there are fewer people purchasing houses than last year. New listings. How many people are putting their house on the market? This is super important, folks. Super important you pay attention to this. You want to pay attention to pending sales. Definitely want to pay attention to new listings because it shows you how many people are putting their house on the market to, for a buyer to purchase. And it's down 1.2%. I mean, this is crazy. Like many people thought we would see a flood of like Airbnb distress. People who lost their job having to list their house, FHA, mortgage problems, fraud, greed, and corruption infiltrating the housing market, causing people to have to sell their houses. If that was the case, new listings would be a heck of a lot higher than they are now. I mean, we're still at low levels. We're not even back to 2019 levels with new listings, and they're falling. So. But comment and let me know what you think. I mean, are you seeing more people list their house for sale in your neighborhood? I'm not, but maybe you are. Active listings. How many homes are actually on the market? This is a big, big problem for spring. It's a big problem if you want a housing crash. It's a big problem if you want a housing boom. Because if you have fewer people listing their house, and you have active homes for sale falling, it just means there's fewer homes for buyers to choose from. Fewer sales equals fewer comps equals no price discovery. And that keeps prices higher because nobody's selling. So when you have fewer people selling their houses, there's no comps to compare them to. I mean, that's just what's happening. And it's just not good. It's not good. I expected this to be a lot higher now. It's not. We started to see the decline, at the second half of last year. We never really saw that boom of inventory that many had thought was coming. And there's reasons for that we'll get into. But active listings just aren't where they need to be. Months of supply. How many months of supply? It's 4.8 months, meaning if we didn't add any more homes on the market, our current inventory would last 4.8 months. That's what that means. Share of homes off the market in 2 weeks or less, still 31.8, means that homes are going into contract, about a third, approximately. A third of homes are going into contract within 2 weeks of going on the market. So 14 days. Median days on market, 66. So that house in the middle, the median house, is sitting on the market 66 days before it goes into contract. Share of homes sold above list price, 20.5. That's down from 22. This continues to fall. So fewer and fewer buyers are paying over asking. That's probably a healthy thing, right? That's probably healthy. How many realtors are going to say that, right? Not many. But I do, because I picture myself as a normal person, right? Not as some kind of weird realtor. Average sale to list price ratio, 98%, down from 98.2. So that basically means, hey, buyers are getting about a 2% discount. This continues to come down. This 98% continues to drop. That means basically tells me, hey, buyers are getting some deals. Like sellers are maybe starting to negotiate more. All right. Now let's do some metro level highlights. This is looking at the top 50 metros and where the winners and losers are, basically. So the metros with the biggest year-over-year increases in median sale price: Newark, New Jersey, Philadelphia, San Francisco, Baltimore, and Chicago. Not surprised by those cities at all. Those are the markets that are still typically going higher and higher with prices. They have more demand, and fewer homes for sale, generally speaking, than the Sun Belt states in the South and out west, except San Fran. San Fran's seems like it's always a strong market as far as demand goes. Metros with the biggest year-over-year decreases in prices. Where are prices falling the most? Oakland, Dallas, Boston, Denver, San Jose. This one stands out to me. Boston. So we have a northeastern city now on the year-over-year decline list for the biggest year-over-year price decreases. The other ones don't surprise me. Oakland, Dallas, Denver, and San Jose don't surprise me, but Boston does. So prices look like they may be headed down in Beantown. Here's something that's interesting. Declined in 18 metros, meaning the median sale price is now lower in 18 of the top 50 metros. 18 of the top 50. If you look at the top 300 metros, remember, folks, I track 3,000 counties and 900 metros. 900 metros, 3,000 counties is what I look at as far as data on a nearly daily basis. I'm looking at this data. But if you look at the top 50, according to Redfin, prices declined in 18 of those out of 50. So you've got 32 of 50 still up year over year. But this list is growing now. We're seeing more on the decline list than we had, certainly in the last couple of years. It's not exploding. Like, we don't have, it's not like this is growing exponentially. I think last week we had 15 on this list. Now we have 18. It'll be interesting to see if prices continue to drop in more and more metros. I wouldn't be shocked if they do. My call for the year is actually prices to be down. I think this metric right here is going to be down year over year by the time we're done with this year. But you tell me what you think. Comment, let me know. And by the way, if you're joining us, welcome. Please hit the like button, share the video, gets more people involved in the live stream, and stay tuned. I will start to review your individual zip codes, counties, whatever you want me to, as far as your actual housing market here in a few minutes after the national update. So definitely drop those below. All right. Pending sales. Back to some of this national just overview. Pending sales, where they're going up the most. So where we're seeing more and more people buying houses. Like, where's demand the strongest, I suppose, compared to last year. And this is only looking at the top 50 metros, though. Milwaukee, Portland, West Palm Beach, San Fran, and Austin. So this is where pending sales are going up the most. Now, where are they going down the most? Nassau County, New York, Oakland, Houston, New Brunswick, New Jersey, and Providence, Rhode Island. Yeah, like a lot of these northeastern cities are seeing fewer pending sales. A lot of reason is because, or big reasons, because they don't have any inventory. So they're like, man, we don't have anything. Buyers are like, I can't buy. There's nothing to buy. Nothing good to buy, right? I mean, there's always homes to buy. It's just if there's enough that makes sense for the buyers out there. New listings. Where are new listings going up the most? In other words, where are sellers putting their house on the market for the first time? Milwaukee, Portland, Seattle, Washington, D.C., and Austin, Texas. Where are they going down the most? Nassau County, New York, down 27%. And no surprise, look at their pending sales, down 22%. So in Nassau County, New York, you've got 27% fewer people listing their house than last year. Nearly a third. That's not good if you live out there and you're a buyer. That's not good. In a way, it's probably not good if you're a seller either, because you're like, well, if I sell this house, where am I going to go? There's nothing to buy. Same in Providence, Rhode Island. Look at New York. I mean, all this in the Northeast, all of these areas Nassau County, New York, Providence, Rhode Island, New York, New York, New Brunswick, New Jersey, and Newark, New Jersey. Pending sales, new listings down, 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 down. Unbelievable. The people, like, I feel really bad for the people in the Northeast when it comes to the housing market. It's the worst market in the country from a frozen standpoint. There's just no inventory. There's no inventory. And I wish more YouTubers, housing analysts would admit that. I wish they would be truthful with themselves and their audience and explain, hey, I may be a doomer, but guess what? The Northeast has no inventory. There's no explosion of distress and, motivated sellers. It's not happening. Sorry. That's the problem with narratives, by the way, because when they become incorrect, you're like, oh no, now I can't tell the truth. But it's just what it is. There's markets where there's a lot more inventory and there's markets where there's not. And the Northeast has nothing. This is insane. All right. Anyway, so that's what's happening on a national level. Basically 330,000 price cuts across the country, 33% of all sellers. I'll just recap this real quick again. You can see it here by Housing Wire. By the way, this new interface from Housing Wire is really nice. Down 33% of all homes have had a price reduction. So 330,000 sellers have cut their asking price. That's a lot, right? And then when you take a look at the top line figures this week on the housing market, you got new listings down. You've got pending sales down, right? And you actually have active listings down. And that's like a trend down. I mean, look at that. So frozen market, that's the national picture, but you don't care about that. What you care about is the market where you live. And that's what you should care about, by the way. But the national looks just fun to kind of take a look at and from an overall narrative standpoint, I suppose. Probably it's something else I should mention here just briefly. I'm looking at my notes, is that this data is showing you what's happening in a graph and on a screen, but it's not showing you what can really happen on the street. And so as a realtor, I can tell you that here in Ohio, I'm helping buyers, I'm helping sellers, and something I'm starting to discover here locally is even homes that are priced right, even homes that are dialed in on their price, still may take a while to sell. This spring is definitely different in that case, in that situation here in Ohio. So I'm seeing there are homes that move fast, like within days, sometimes with multiple offers and go over asking. I'm not saying that doesn't happen, but even homes that are priced right, beautiful condition, move-in ready houses, those are even starting to sit a little bit more so than they would have, a few years ago. So, you have to be patient as a seller. You have to be patient as a buyer. You definitely have to be patient as a realtor. So anyway, I thought I'd give you that little glimpse of reality on the street. Okay, let me check some comments. Then I'll get into these zip codes that you want me to review. And we'll see what's going on. Evil, what's happening? Evil morning. First in, thumbs up given. Thank you. If you're doing it, 44240. Yeah, I'll do that one. And by the way, if you're on here from Ohio, I do have an Ohio only channel, the Ohio Housing Nerd, because I live in Ohio and I love Ohioans. So if this is my national channel, then I'll do an Ohio one live at some point here over the next couple days. All right. How long do you think the data is lagging behind what is actually happening? What would you do to predict beyond the current data? I don't know that you could predict anything beyond the current data, Evil. But I mean, you can always guess. Like I gave a forecast earlier, right? Home prices would drop 1% or drop versus last year. I think they'll be down a couple percentage points overall. They may be up 1% overall nationally for this year, but I wouldn't be shocked if they're down a few percentage points. So that's a prediction I guess I get from the data. But when you ask about the lagging behind, this Redfin data I show at the beginning of all these lives, it's a weekly look, and I'll show you this. So if I look at this right here, you can see that They say start date 2/2/2026, end date 3/1/2026. So this data is through the 1st of March. Redfin, actually, and Housing Wire now does too, but Redfin's free, Housing Wire's not. Redfin has the most up-to-date data because they do this weekly. So they pull all the MLS data for the for this time period, and they report it, and then they update that every week. So today's the 6th, right? So they don't have obviously the 5th on here. If you want the most up-to-date data, you would have to, like, if you wanted yesterday's info, you'd have to look at the MLS where you live. You'd have to have a realtor, or you have to have your realtor license, obviously, or your real estate license, and you can dive into the local MLS and pull the data for like yesterday, what happened yesterday. But that's, I mean, this Redfin data is pretty much the most up-to-date stuff that's available that I've found. So hopefully that answers your question. Definitely the price. Are you talking about the poll question? Yeah, definitely the price. Okay, rates have come down from their peak of over 8% in late 2023. Yeah, they wait, did they go over 8? They may have for a couple weeks. To 5.99 a few weeks ago. If it was only the rate, we would have seen a surge in new home buyers. Opposite happened. Yeah, great point. The other thing is, I always, I thought maybe we would see more sellers too as rates dropped. We haven't. So it's neither sellers nor budgers, neither sellers nor buyers cared about the low rates, really. So we'll find out as we go through the spring. YouTube, what's up? How many years have you been waiting for that price crash? Me? I don't know if you're talking about me, but there's people probably been waiting since the big. I would imagine there are people waiting for a price crash since like 2005, probably longer, right? Where they're like, prices are running up. I'm going to wait for the crash. Then when it crashed, a lot of people were like, I'm not going to buy because prices are probably going to keep going. It's probably dangerous to buy, so I'm not going to. Then prices ran back up, and they're like, I'm going to wait for a crash, and now they're still waiting. I think a lot of people did that, unfortunately. Same thing with stocks, right? People do that all the time. They're like, well, it could go lower, so I better not buy. And then they miss out. Then they kick themselves. Then the cycle repeats. What's up, Larry? How you doing? Thanks for joining us. Let's look at your market, Larry. Tell me where you live, or make one up, and we'll look at that one. The only two things that will increase inventory are recession or wage increases. Maybe you're right. I don't know. You could be. Or wage increases. That will increase inventory. Okay. And you say recession, that could increase inventory. That's true. But what about building? We couldn't build more homes. Is that possible? Maybe. Definitely need to. Our housing stock is old. 75098. I'm looking to buy here, but prices are still too high. Okay. We'll look at that one. Oh, you guys are arguing with each other. That's okay. We are capitalists. When prices go up, but all of a sudden, Marxists when pressures build to push them down. This is why a recession or wages are the only answer. Cheers. Cheers to you too. Hopefully you're not drinking this early. Agreed, Jason. Not many homes on the market, and then many are both outdated and overpriced. Yeah, that's true. Don't mind putting in work, but the prices need to make sense too. Agreed. Yeah, you got to make sure the math pencils, right? Like you can't just buy. You can't just buy. No, you can't do that. Absolutely not. Um, but I agree with what you're saying. Yeah, price is high, even properties that need fixed up. I was just looking at one today with a client online, and the place is destroyed. And you're like, okay, well, it's like 50 or 60 grand, I think. It was a big house, like a big Victorian house. Could be awesome if it was all done, but shoot, man, that thing probably needs it could need 250 grand in work. Like everything it needs. Like there isn't a part of the house that you're not gonna have to renovate. And so does it make sense it's at $60,000? Maybe not. I'm just looking for anybody who has a zip code they want me to look at. Sometimes it gets lost in the noise, so you may have to put it back up. But you guys are talking, which is good. Oh, What do you have to say? What's up, Pro? Cool beans. I love that term. Redfin revises their data every week. They definitely do, to make it look like the sales line is going up more sharply, even when the week-to-week changes in the numbers flat. Now, I know Travis at Real Estate Mindset would say that. He'd get his pencil out and draw it on the screen. But, dude, like, they should revise their data. If they didn't, that would be a problem, because they're reporting it based on what they pulled from the MLS just last week, right? And the simple fact is people make mistakes entering that data. So the MLS is revised constantly. And so I don't think it's a bad thing that they revise it. Do I think they're manipulating the data? I don't personally. I just don't. Um, there's nothing to gain from doing that. There's really not, because they make their money on transactions. They make their money on transactions. So if people buy anything, that's how Redfin makes their money. And you would think higher prices actually discourages people, not encourages them. You'd think they'd want to show the price going down. So anyway, I don't know. I just take the data what it is. It is what it is. I mean, I can't police them. What's up, Larry? The Housing Wire data has little significance to the Ohio River Valley. Well, I mean, it's just a look overall. But yeah, is that where you are, the Ohio River Valley? That's great. I used to live in Shady Side. You know where that is. First time buyer here. I'm in no rush and waited it out. You got to have patience. Just like Axl Rose said, have some patience. All right. You got one right here. Oh, by the way, Bambi, where do you want to buy? Do you want me to look at that market? If you do, just put it in the chat and I'll take a look at it. What's up, Ryan? What do you got? Considering relocating to Florida from South Shore, Massachusetts. I think this market is never going to recover. Inventory keeps getting tighter. It does. The inventory there is so bad in the Northeast. Yeah, let's look at your market. Oh, you already said something. Bambi, got it. What's up? Yeah. Oh, and near Nashville. Okay. Whoa. Michael Downey, what's happening? That's awesome. This is my dude here. We went to high school together and got into a lot of trouble together. So played football together, the whole thing. Mike's in the movie business, actually. He's a movie producer. What's up, Mike? You just got married too, right? You moved to Flagstaff, Arizona. That place is awesome. I'm jealous. Thanks for jumping on, bro. All right, what else we got? 57701. Okay. You looked at this a few weeks ago, but as a buyer in the market, things look like they are slowly changing since then in favor of buyers. Yeah, let's find out. Will you take a look at 22309? Yeah, no problem. What do we got here? 16055, please, or somewhere in Pittsburgh. No, I'll definitely do that. I love looking at Steel City. What's up, Jay? Jay Grams. My landlord is 80. Him and his wife told me they are waiting to sell their house, which is very old and needs some work. They told me they're waiting to see if Trump removes capital gain before selling. Yeah, interesting. Oh, because it's because it's a second house, right? And they would get slapped with capital gain tax. Yeah, that's I've heard that as like a rumor, like they would remove the capital gain on your second home selling it. Would that, I mean, it'd probably give a lot of people reason to sell. I can tell you that's one of the biggest objections I hear when I talk to a landlord, and I talked about, I've talked to them about buying their property, buying their duplex or something. A lot of people are like, I don't want to pay the tax, or they don't know what to do with the money. They're like, well, if I get this 200 grand, what am I going to do with it? Right now they're getting cash flow, right, off the property. They're like, I don't know what to do with the 200 grand. So a lot of people, it's taxes or don't know what to do with the money. So that's an interesting point. You could, we could increase some inventory maybe. What do you think about that, Larry? Locked up Larry. Could we increase inventory from no capital gain tax? Oh, Bowling Green, Kentucky. Okay. Nothing new is being listed and everything is priced so high. Yeah, we'll look at that one. All right. Let me get to some of these now. Thanks, folks, for suggesting those. If you have one and you're just jumping on, go ahead and suggest your zip code. Hopefully I can get to it. I'm going to use Resi Club Terminal to access this. to show the markets. That's what I'm going to use. Let's go. Here we go. Resi Club Terminal. Now, I'm not using Redfin for our analysis of these markets because it's it doesn't go down to a zip code level. It only goes to a county level, and the Zillow data is something that shows us the typical value, not the median value, and that's important. I think I like looking at the typical value of houses, not the median, because median can be very deceptive, but typical value takes out the top end and the low end, which is always helpful. All right, first one. Which one we got? We'll do evils. What's up? 44240. We'll look at that one. All right, so let me start with inventory, and then we'll look at prices. So active homes for sale, you've got 6% more than last year. But versus 2019, and folks, we look at 2019 a lot of times with inventory because that's when COVID hit, or 2020 is when COVID hit. But in 2019 is when we had, quote unquote, a normal housing market. And so we compare the inventory now to the inventory in 2019 to give us an idea, are we back to normal levels or not? In a lot of cases, if you're not back to normal levels, your prices are still going higher. If you have exceeded the 2019 level of inventory, prices are probably starting to come down in most cases. It's not universal, but that's generally speaking the case. So you have 40% in zip code 44240, which is Ohio. Sorry, I should have said that. You have 40%, basically 41% fewer homes than you had in 2019. So let's look at the active inventory count. Yeah, you've got 26 homes right now. In 2019, you had 44 on the market for February. In 2020, you had 43 homes, so you've lost inventory. That's obviously not going to help prices, generally speaking. Let's look at prices. How much are homes there? They are up. Home prices are up 4.2% versus last year in that zip code 44240. Not median price, it's the typical price. And that takes out the top most expensive homes and takes out the lowest price homes as well. Kind of the anomalies. Let's look at the typical home price. All right. Typical home value in 44240, $235,429. That is an all-time record high price for 44240. That's Medina, right? If I remember right. Kent. That's in Kent, Ohio. In Portage County. That's where that is. So prices have never been higher there. They keep going up. I mean, unless inventory explodes their evil, I don't see why you would have a massive price decline. You just need more homes. And I'm guessing there's not a lot of new homes being constructed. That's just a guess, though. But I doubt, knowing Ohio like I do. So you need more homes. You do. And so this spring, will prices fall? Probably not. Nothing meaningfully anyway. Nothing meaningfully. All right. That was evil. Now let's do this one. Ryan, what's happening? South Shore of Massachusetts. You don't think the market's ever going to recover. 02360. Thinking of moving to Florida. I mean, I can understand that. There's a lot more inventory down there. We can look down there if you want to. Tell me where you're going to move to Florida. We can compare the markets. Massachusetts, I mean, we saw that Boston was down in prices, but it'd be interesting to see how this looks. If we look at inventory, how many homes on the market? What do we have? Active inventory is up 4%. Good. So you got 4% more homes for sale than last year. But you've got, and you're right, look at this, unbelievable. You're down 55, 56% in the number of homes versus 2019. Yeah, the market there is just wrecked. Like, it may take decades to get the number of homes you need. You may never get the number of homes you need. It's always been tight there, right? But now it's really tight. I mean, it's just, if you look at the actual number, you in that zip code in Boston, 02360, you've got 119 homes on the market now. During COVID, you had 47 homes. Look at that. Before COVID, you had 232 homes. Well, no, I'm sorry, 270 homes before COVID in 2019. Now, you've just lost inventory continually. I mean, you started to gain it somewhat over the last, like his last year, but nothing meaningful. Not good, man. Yeah, I mean, if your only motive, if you're like, I just want to buy a house, or you really, you want to buy something, you want to get into home ownership, property ownership, whatever you want to call it, it's not a bad idea if you can be flexible to go somewhere else, right? To greener pastures, right? Where you can afford something. Excuse me. And, the other thing to consider, maybe you've already looked at this, is house hacking, or like buying a duplex, living in one side, renting out another. But I got to guess, even duplexes in your zip code are hard to find, or they probably need everything, right? 300K in work. And they're probably still $500,000. So it's rough. It's rough where you are. You look at prices up 2.7%, which is kind of normal for historical standards. Being up 2.7% in a year overall, that's nothing abnormal there. It's just that you've ran up so high that being up still is crazy. Look at this. Unreal. You are now, so you're at an all-time record high home price in 02360. Homes have never been more expensive in South Shore Boston than they are right now. $625,511 is the typical home value. Goodness gracious. And it just keeps going up. You had a dip. When is this? Last summer, you had a dip, but it just started running again. I mean, sellers don't need to sell for a lot of them, right? Or homeowners don't need to sell. Only 2.1% of all mortgaged homes are underwater. 2.1%, meaning only 2.1% of all homes in the U.S. The homeowner owes more on their house than it's worth. Well, during the GFC, that was 25%, 26%, something like that. So there's not a lot of homeowners that have a mortgage underwater. Not only that, but 40% of all homeowners have no mortgage. They're free and clear. So they're like, I don't need to sell my home. Why would I? So they don't list it. And that keeps inventory away from somebody like Ryan. Anyway, that's what's happening in the South Shore of Boston. Wow. Thanks for suggesting that. All right, let's look at this one. Bambi, 42104. We're going to Kentucky, huh? 42104. Now, if I don't make it as a YouTuber or as a realtor or as an investor, I can make it as a zip code analyst, I guess. Or you could quiz me on zip codes and I can tell you. Right? All right, let's look at inventory. You've got 27% more homes than last year, but I doubt you have many. Oh, you do. Look at this. You have 173 houses now. So you don't have as many as you did in 2019, but you are gaining inventory. I mean, that's clearly a trend upwards. I mean, there's houses listed probably every week, every few days where you are. Just be patient. Just be patient. Be patient. Find a realtor that is willing to allow you to take your time. Find a realtor that's willing for you to just, buy on your schedule. See as many houses as it takes. It may take you looking at 50 homes, 70 homes, before you find the right one. It may take you a couple years to find the right house. That can happen. So just be patient, but it does look like inventory's building. And it's clear, right? 46 homes on the market in February of 2022. Now you've got 173. So you are gaining the number of homes is for sale, and that's good. All right, prices. How are you doing on prices? They're up 2.1%. Okay. So they are up, they're not down. But 2%'s, like inflation, around inflation, somewhere around there. And look at this steady rise in your typical home value there. It's just kind of gone, it wasn't a massive spike like we saw some other markets. Now it's $318,000. It is an all-time record high. So right now, homes have never been more expensive than they are right now in Bowling Green, Kentucky. 42104. 318,686 to be exact. So prices aren't falling. And keep in mind, they may not fall. Just because I'm saying be patient, your inventory is increasing, it doesn't mean prices are going to fall as you gain inventory necessarily. But the price growth has definitely slowed. You can see that. It's not like it's up, like right through here, through COVID. Like in 2022, you started at 266, and then the following year was 298. So it's not that kind of increase anymore. But it is going up. But the point is, you'll probably, as inventory builds, you'll end up finding an opportunity that makes sense. Just be patient. And it sounds like you are. So that's good. That's good. Look off market, look at auctions, look at Facebook ads, look at anything you can where homes are being listed, because it's not like they're all on the MLS. Some aren't. It's always been like that, but with social media the way it is, now it's even more so. You could drive around the neighborhood you want to buy in. Maybe you already do this, but drive around the neighborhoods you want to buy in and look for sale by owner signs. Those sometimes, those aren't even on the internet sometimes. All right, that's happening in Bowling Green, Kentucky. Who's next? That's not like that dude from Coming to America. All right. Edward, 57701. 57701. Thanks for joining us. Let's look. 57701. What do we got? Oh, South Dakota. Yeah, I remember looking at this. Where in South Dakota? Let's look. Let me just look. 57701. 57701. I apologize for the delay. I'm just looking it up. Rapid City, right? Rapid City, South Dakota. Got it. Okay. Let's see what's happening in Rapid City. All right. Inventory, number of homes for sale. You've got 40% more than last year. And let's find out how you're doing since 2019. You're still down 20% since 2019. 124 houses on the market. That's at the end of February, by the way. That's how they do that. The end of February. During COVID, you only had 20 houses for sale, 20 houses. That's crazy. And then before COVID, you had 156. So you are gaining inventory just like we saw in Bowling Green, Kentucky, but completely different than what we saw in Massachusetts. Home prices up just 1.6%. So from a real standpoint, if you want to talk about real housing growth, not nominal housing growth, if we take into account inflation, they're actually down. And if you compare it to wage growth, it's down as well. It is possible that in a lot of these markets, it just takes time for the housing market to normalize compared to wages. That may be just what happens. It stays locked up. It could be, There are people like Mike Zuber that think that we could be locked up for years, right? 5 years of just stagflation in the housing market. All right, so prices up 1.6% in Rapid City, South Dakota. Let's do typical value. What do we have? 293,000 is the typical home there in your zip code. It and that's an all-time record high. So far, we're finding a lot of record high home prices. Like it was what? Ohio, Massachusetts, Kentucky, and now South Dakota. Random spots, right? But yeah, all these areas have the homes have never been more expensive. $293,000. Unbelievable. Usually you hit your record like in, June, July, maybe May. So it's crazy to be hitting it in the winter. But you're right. Homes, I think you said this. Didn't you say homes are expensive? Let me see what you said. Oh, you said you're looking as a buyer in the market. Things look like they're slowly changing since then in favor of buyers. Well, you are gaining inventory, so that's a good thing, right? You are gaining inventory. Let's look at, and I didn't do this on the other ones, but let me look real quick at price reductions. They may have it listed for this area. Let's look, price reduction share. Okay, so in your market, 13% in that zip code, 57701. 13.8%, to be exact, of all homes have had a price cut. And if you look back historically, that's certainly more than you've had, right? Like going back a decade, you had 4.7% in 2021, right? 2017, you had almost 11%. So I guess that's creeping up on the same amount, but 13.8%. So it's not 33% like it is nationally. Obviously, a lot of areas are hurting compared to Rapid City, South Dakota. So more inventory, but your prices are still going up. All right. That was Rapid City, South Dakota. What's next? The Pendram. Will you take a look at 22309? Yep. Let's look at 22309. Virginia. Where in Virginia is that? 22309. Oh, south of DC, huh? Oh, yeah, this will be interesting to look at. These are all interesting for me. Never a dull moment. Inventory. How many homes do you have on the market compared to last year? 12% more. So gaining some inventory. Now, remember, nationally, overall, our inventory is down nationally. So you're up, different than the national number. But compared to 2019, you have 15% more homes. So theoretically, prices should be coming down. You have 38 houses at the end of February. You had 38 homes on the market. You had 19 homes back during COVID. Before COVID, you had 33 homes. So about right there. You can see your inventory trend is up. So people are probably listing more houses. Good news for you. Home prices are down 0.8%. Not surprised based on that inventory growth. So, prices are falling. And if you take into account inflation or wage, compared to wage growth, they're definitely falling. All right. Now let's look at total home values. Where are they? Now they're off their peak, $675,000. The peak was like right here, February 2025, 683 grand. So you're like, a few thousand off the all-time high there in DC, in Washington, DC, or south of DC. I don't know if you're seeing a lot of layoffs. Are you seeing a lot of layoffs where you are? Let me know. Maybe that's what's driving some of the growth in inventory. Maybe the price decline. It's not a huge price decline, but it is a decline. And I mean, we're comparing going all the way back. I mean, when you think about it, we're back in January of yeah, January, March 2025 is when you hit your all-time highs. About this time last year, around then. So prices are not growing much. Well, actually, they're down, right? Your prices are down year over year. Down 0.8. Down 0.8. All right. Let's see. Okay. Go back to this. Hopefully that helped for Washington, D.C. What's next? OM. I don't know what that is. I'm not going to try to pronounce that. 16005, please. That's where you want, or somewhere in Pittsburgh. No problem. Let's do it. 16055. 16055. Inventory. How many homes do you have on the market? Oh, and I should, and this is in Pittsburgh, right? Yeah, let me look. Yeah, Pittsburgh. Got it. Yep. Inventory. You've got 70% more houses than you had last year. That's a big jump. That's a big jump. As long as you have like a good sample size. If you have like 15 homes, that's not going to mean much. But you still have 40%, nearly 40% fewer homes on the market than 2019. So again, like a lot of other areas of the US, you're growing that inventory every single month. It's growing, it looks like, but you're still not back to that 2019 level. And that's normal. Yeah, you only have 13 homes though on the market. So when you say 70% growth or 50% growth, whatever, doesn't mean much because it's only 13 homes. So you had 7 during COVID. Now you've got 13. Not that much, there's still not a lot of houses to choose from. But historically, though, you don't have a lot of houses either. You only had 24 houses in 2017. So it's not like you're used to a lot of homes on the market. But let's look at prices. I wonder what they're doing. Prices up 3.5%. So they are up, no doubt. They are growing. Let's look at your price. What's the typical home value there? Typical home value, and this is in that middle area, the 35th to 65th percentile. So it takes out all the top end homes and all the low end homes. And they call it typical. 325,289. And guess what? That is an all-time record high. So homes have never been more expensive in 16055 in Pittsburgh, PA, Steel City. I mean, you don't have a lot of homes on the market, but you usually don't. I guess if you had another 10 homes or 15 homes, would that change things? Maybe. But right now, prices are continuing to go up. I mean, they haven't gone up steadily every month, though. I mean, there's been months where the prices have fallen, no doubt. But right now, they are going up continually. 325,289. So you're either going to have to wait for more homes, find an off-market deal, or look somewhere else. Like, for instance, and if you want this done, you're going to have to tell me in the comment if anybody's requesting your zip code. Let me know in the comment because I'll forget to do this. But we can look at kind of the other areas around it to see who has more inventory. Like if I look at active inventory versus 2019 and I zoom out, well, that's not helping us. Everything's down. So all these zip codes around you have fewer homes for sale than 2019. Let me look at this. Active inventory versus last year. You can see some of them have a lot more. So like your zip code had 73% more homes for sale. But look at 16023 north of you. There's 233% more homes on the market. Do they have a lot of houses? Let's find out. No, they don't. What about this guy? They don't either. Let's find this active inventory count. Yeah, I guess around you, there's just not a lot of houses for sale. I mean, these are the active inventory counts. You've got 13. The zip code next to you has 3. This other zip code has 2. Goodness gracious, there's nothing for sale out there. Is this like the Summit County area? Kind of looks like it may be. Like if you go further east into 16066, there's 86 homes on the market. I guess that's better than nothing. And then further south, there's some. But overall, your inventory is sparse. You have to go up to 16101 to get some inventory, 105 listings up there. Man, there's just not a lot for sale where you are in Pittsburgh, or just in Pittsburgh total. $82 homes in 15601. So you may have to go to one of these other zip codes to find an opportunity, find something off market, wait for more inventory to come to market, which may not happen for a while, not unless something really breaks loose in the market. Anyway, that's what's happening in 16055. All right. If you're joining us and you want your zip code analyzed, drop it in the comments. If there's a ton of them in there, then add it in again, or feel free to throw me a super chat and I'll see that, obviously. What else we got here? Who's next? And hit the like button, thumbs up, share the video while we're doing this. That helps people get involved and greatly helps out the housing nerd. This one. Right? No, we looked at this one. All right. JQ 2561 75098. I'm looking to buy here, but prices are too high. Where's 75098? Where's that? 75098. Wylie, Texas. All right. Let's head out to Wylie, Texas. 75098. Wylie, Texas. You got some inventory there. Good. All right, let's look at active inventory. You're up 13%. So 13% more homes on the market. You want to buy, so that's good. At least you don't have fewer homes on the market. But you are down slightly since 2019 in the number of homes. So you are growing it, like we keep seeing. Year over year, you're growing. But you still don't have as many homes you had in 2019. But it does look like you're adding inventory. I mean, look at this. You're at 201 listings right now. Last year, 176. During COVID, you only had 29 houses for sale. So it's a completely different story there with inventory. You're definitely adding it. And going all the way back to 2017, nearly a decade, the most you had was 211. The fact that you have 201 means you're approaching a decade high level of homes for sale. Generally, that leads to better deals, better opportunities for you as a buyer. Let's find out if that's true right now. Yeah, look at this. Prices are down 5.4% year over year. And they've dropped a lot this year. I mean, they've dropped in many months. They've dropped. I don't know how much they've dropped overall. We'll have to look, but they are coming down. Yeah, look at this. 420,166. Your peak was back here in 2022 at 464,598. And it hasn't really recovered since then. It dropped, leveled off, and then continued to fall. So you're off the all-time peak by, well, I can tell you exactly. Let's see. You're off the all-time peak by 10%. I mean, that's a pretty good drop, right? I mean, a lot of people consider a 20% drop in prices a crash. So you're halfway there. I would think you were seeing opportunities. I got to think there are deals out there to be had. You may still have to negotiate, but I mean, the trend is not looking like prices are going to go back up at right now. And if you keep adding the number of homes, if you keep adding to inventory, you will probably see lower prices. I mean, that's for anybody listening to this. If you're like, I don't really understand what Jason's saying, he's kind of weird, which is fine because I am weird. But if you can look at two things, folks, look at two things in your market. If you're like, I just want to look at two data points. If you can just look at the active homes, how many homes are on the market right now? And if you want to look at new listings, that's another way to gauge the market, because the new listings are going to tell you, hey, more people are listing their house. That means they want to sell. Maybe they even need to sell. But it really boils down to active inventory. If you just look at the trend, like if you go back 10 years like this, and you could ask a local realtor for this info, like, hey, tell me, how many houses have been on the market every month for the past 10 years. They can pull that pretty quickly. Give them the zip code, give them the exact area, and give them the type of house you're looking for. Don't look at $1 million houses if you're buying a $300,000 house. You do that, you're going to see a trend. And if it looks like this, prices are probably going to keep coming down if you keep adding more and more houses. If you see a trend like Massachusetts where inventory keeps falling and it's never recovered, prices will probably keep going up. Anyway, that's one of the things you can do locally. But yeah, prices down here in Wylie, Texas. What's your typical value? Did we look at that? I think we did. Yeah, we looked at this, right? $420,000. Wow. 75098. All right. I love looking at these other these weird markets. Not weird, but just, markets I would never look at normally. All right. Who else has some? Been waiting for this live. Been waiting all week for this live. Can't believe it's here. Great content. Wow, thanks. I appreciate it. I'm honored that you've been waiting for it. Seriously, thank you. I'm looking at houses in 55125, Woodbury, Minnesota. Woodbury, Minnesota. All right. Yeah, let's look at that. 55125. And Minnesota seems expensive. Not expensive, but, homes they seem like they're above the median there when I look at a lot of the data. Come on. All right. Here we go. Inventory year over year up nearly 40%. So you got 40% more homes on the market than you did last year. And you've got active inventory versus 2019 up 100%. I'm guessing you don't have a lot of homes on the market. Well, I mean, you got 50. That's not like 10. So you have 50 houses now. Last year you had what, 36. During COVID you had 19. Yikes. But historically you haven't really ran, more than what, 56 has been the most you've ever had. So you're getting back to that normal level. Maybe even exceeding the normal level. Where is that 55125? I know you said Minnesota, but I'm just looking where Minnesota it is. Oh, St. Paul. Okay. A St. Paul zip code. Got it. Yeah. So, I mean, you're definitely adding inventory. Let's see how prices are doing now. Okay. So prices are not down year over year, but they're only up 1.6%, meaning they're still down compared to, when you think about inflation. And, in most cases, wage growth is outpacing home price growth. So from a technical standpoint, prices are falling. Home prices are falling in much of the US. I mean, nationally, we're only up 1%, right? So they're really falling in real terms, right? Hard to say. 1.6% up year over year. Now let's look at the typical value. What do you got? Typical value is 415 grand in St. Paul, Minnesota. Is that an all-time high? Are you still at an all-time high? Yeah, you are right now. You're maybe not. Yeah, it is. Right now, still an all-time high home price. Wow. But again, this could change, it's not going to change rapidly, it doesn't look like, but it could change slowly over time because your growth is only 1.6% versus back here, look during COVID, how much home prices were growing. 15% each year. That's not sustainable, and it wasn't. And what's interesting here, look at this. This is really interesting. You're at 1.6% growth now. Look back in like 2015, 2017, 2018, 2019. Look at that growth of prices. It was like 5%, 6%, 5%. So you're under historical growth averages for prices, no doubt. No doubt. You can kind of see back here, it's kind of interesting, the tail end of the great financial crisis, right? Like 2011, 2012. Now this, by the way, man, I didn't explain this earlier. There's a lot of data out there, so I know it can be confusing. This service I'm using here is paid. You got to pay for this service from Resi Club Analytics. But you could go to Redfin and get very similar charts if you looked at their monthly data, and that's free. I just like this info better. But there's nothing wrong necessarily with using the Redfin data. And they have a chart like this that goes back, I think, to 2010 on pricing. 2011 or something. But anyway, you could see the great financial crisis right here. Look at that. Prices were down. Look at that. Down 8% one month, year over year. If I look at your typical value, again, if I go back and look, yeah, look at this. Houses in, let me see. They cut that data point off. Anyway, look back in 2000, the year 2000, homes were $158,000. Then they peaked right before the great financial crisis. They peaked at like 260, right? And now then they fell all the way down to 196 grand for your typical house. Now that same house is $415,000. But look, do I think we're headed for another 2008? We could be if something changed in the economy that was drastic. But right now, sellers do not need to sell for the most part. So the chances of having a dip like this again from 280 all the way down to like a 196, losing like $100,000 on the value, a third, maybe a 30% drop where you are, is slim. The chances of that happening that's slim unless you see active inventory skyrocket, right? So if we see this number go up to like 300, well, then you know you'll know a problem's happening before that. But if all of a sudden there's a massive unemployment surge, something else occurs in the economy, that causes people to have to sell their properties, that's when you'll see distress and a lot of inventory. And that's when home prices fall the most. It's all about supply and demand, folks. All about supply and demand. All right. If you're joining us now, if you're on, drop your zip code in the comments. I'll try to get to it. And hit the like button and subscribe to the Housing Nerd. 43566. I'm waiting for the fiat dollar to crash and use my silver to buy land, a la Weimar collapse and market crash in 1929. Man, there's a lot there in that comment. And sometimes I'll try to pronounce your names, but like this one, maybe it's just there and I can't figure it out, but I don't know what that says. Your YouTube handle. Nobody's just like Bob, right? Bob 125 or something. People have these names, and not to say your name's weird. It's just hard for the Housing Nerd to decipher quickly. 43566 is what I'll do. 43566. And you're waiting on the Weimar Republic to happen, huh? You must be listening to Mitch Wexler. Maybe you're not, but he says that a lot. 43566. Okay. And where is that in Ohio? Oh, okay. You're in Toledo, huh? Like the Toledo area, right? Yeah, I know that market. All right. Inventory is up 35% year over year, but my guess is you don't have anything on the market really. I mean, you got 25 houses right now. You add a couple and the percentage is going to go bonkers, right? So I would look at the number of homes versus the percentage if you're in a market that only has a handful of houses. If you have like 100 or 80 homes or something like that, then you can really start to look at the percentages more. But 25 houses right now. During COVID, you had 10. Back in 2017, you had 35. So you are gaining. The question is, are you going to gain enough to cause prices to fall meaningfully? I mean, right now, look at this. Toledo, like Toledo, Akron, Dayton, Columbus, Cincinnati, Cleveland, all those areas pretty much continue to go up with their home prices. I mean, I don't see them falling much at all. 5.3% growth in home prices, folks. 5.3%. Wow. The last time you had a decline in home prices in that zip code was no surprise, in 2011. You have to go all the way back to 2011 before you saw a decline in prices. Man. Man, oh man. Typical value. What do you got? All-time record high. Wow, it's expensive there. $341,294 in Toledo, Ohio. All right, 43566. I just want to make sure I got my bearings. Waterville, right? Which is kind of Toledo, isn't it? I don't want to say the wrong thing. It's in Lucas County. Well, I'm going to call it near Toledo. That's what I'm going to say. But man, homes have never been more expensive than they are now. All-time record high price in Toledo, Ohio. 43566. $341,000. Man. Now, what do you need? You need a lot of inventory. To get a lot of inventory, there has to be a mechanism for someone to sell their home. Like there has to be something, there has to be an incentive for them to sell their home, right? So if there's not an incentive for people in your zip code to list their property, they're not going to sell it. And that keeps inventory off the street and keeps prices high. So what's that mechanism in your zip code? Ask yourself that. Is it people all of a sudden need to sell? Why? Well, they have to, because of job loss? Maybe there's a massive employer there that goes belly up and all of a sudden people in that zip code have to put their house on the market. That's going to cause prices to go down. But if you don't get that mechanism, a lot of people will just stay. I mean, there are people right now with stupid low mortgage payments, even with the increase in property taxes and insurance. I mean, even if it's a couple more $100 a month for them with insurance or taxes, it's still less than what they would pay if they moved. So that mechanism is not there. It's not there. And that's what I'm seeing in city after city, especially in Ohio. People pass away, people get divorced, people go bankrupt, people change jobs. That happens every year. But you need widespread distress and listings and inventory to cause prices to go down. You just do. And that's just the facts. Something else is interesting. Like, look at your market back in 2007, and that's right before the great financial crisis, right? Like inventory nationally in 2007, we had 4 million houses on the market. 4 million. 4 million. We got 1 million now nationally, right? I don't know how many you had in your market at that time. I don't have that data, unfortunately. I wish I did, but I don't. So But look at prices. You in 2007, your prices were the typical house was 183 grand. It fell to 163. I mean, is that the end of the world if you live there? Probably not. The point is, in some of these areas, like in Ohio, in the Northeast, even in areas like in areas of Texas, probably in every state, there are markets like this where there was not a big crash during the great financial crisis in prices because inventory was never really that rampant, right? It wasn't like there were thousands of houses on the market for you. So there was not a big price crash. Some people had to sell and they sold for less. I mean, your market's been kind of steady Eddie up until COVID, and then it went bonkers. And it hasn't looked back. So you're at an all-time record high home price. Sheesh. Okay, that's that. Thank you for suggesting that. No, by the way, you're going to use silver to buy a house. I had somebody try to negotiate with me to use Bitcoin to buy a house, or it was an apartment building. They wanted me to pay with Bitcoin. We couldn't figure it out. The whole idea there obviously is not you don't have to sell your Bitcoin. They wanted me to trade them Bitcoin to purchase a property, but it didn't make any sense when we got down to the the nitty gritty. Could you use silver to buy land or a house? Sure, you could do a trade. I think. I don't see why you couldn't. Maybe you'll do that in the future. I mean, compared to gold and silver, home prices are cheap. I never hear anybody mention that. I mean, if you're waiting for an apocalyptic crash, though, you just have to ask yourself what that mechanism is. Like, why would people have to sell their homes right now? I mean, you saw what happened during the last crash with home prices in your market. They didn't fall that much. Now, if you move to Texas or in Florida, you could probably see some, get some bigger discounts, right? Then you would see more of a bigger, you'd see a larger crash. But thanks for joining us. What we got next? Oh, what percentage of houses without a mortgage really have private financing or hard money loan? Not many. Not many. I know that there's this narrative going around out there, but it's just grasping at straws. I'm not saying that's you because I don't know, maybe you did come up with this on your own, but it's not many. The average person who paid off their house does not have a private loan like that. And there's not a bank or a mortgage company, even a hard money lender, that will loan you money without doing a thorough title search and putting a lien on your property. And if you've paid off your mortgage, I'm talking about paid off mortgages, then you've paid it off. Most of the people that have paid off their mortgages are just people that have paid off their mortgages over time. Just a normal Joe, right? Nothing nefarious going on there. There are probably some private financing going on behind the scenes, but it's very minimal. Most people buying a house and paying it off have not, didn't use private financing. And by the way, when you use private financing, that's usually recorded as well. That's not something that's hidden, at least not when I've done them. When I've used seller financing to buy deals, they're always recorded at the county level, always, as a real mortgage and note. So I would say that percentage that you're asking about, Hank, is very small, very small. I mean, maybe a couple percentage points. But the fact is that most mortgages that, or most homeowners that don't have a mortgage just paid off their house. And it's not that elevated compared to historical standards. I mean, it's like 41%. I think during like the great financial crisis, it was like in the low 30s. It's not like it's triple what it usually is, but it is growing. One of the reasons why it's growing, math-wise, if you think about it, and you have a really low interest rate, which like a lot of people have a rate under 5%, right? So if you have a low interest rate, a bigger portion of your payment goes to principal, right? So because of that, you're seeing that acceleration in mortgages that are paid off. Plus, I know probably half a dozen folks that refinanced when rates were low into a 15-year mortgage. They went from a 30 to a 15-year at a lower rate, lowered their payment, and now they've been paying sometimes double a month. And eating away at that principal balance. So I'm seeing that. During low rates, everybody bought houses that were way overvalued. I'd ask compared to what, right? If you're in Hank's situation in Toledo, Ohio, I mean, they could be overvalued, but now they were cheaper than they are now. So home prices have gone up since then. So I always ask compared to what? Compared to gold, not really overvalued, right? And that always corrects itself, in my opinion. It'll always correct itself. How many homes are listed for sale that aren't on the MLS? Great question. This is so funny you mentioned this, and I'll get back to your zip codes in a second. But I had a conversation with Ethan Flynn last night. I don't know if you know Ethan Flynn. He's a YouTuber in Nashville. He had Melody Wright on his channel and debated her. I thought it was a great debate. But we talk every once in a while, and he called and actually gave me some information about this. He tracked it down and said historically it's 20% in Nashville. This is for Nashville now. I don't know about Columbus, but I wouldn't doubt that it's 20%. I wouldn't doubt it. But I think it's always been like that. Historically, there's been deals off market all the time. But here's the thing, Hank, you gotta just remember this. I encourage you to remember this. If you need to sell your home, if you're like, I gotta sell or I'm gonna go bankrupt, if you're a distressed seller, if you're somebody who's motivated, you're not going to just sell off market. You're going to sell everywhere. You're going to put it on the MLS. So there could be off market transactions, but guess what? Number one, there always are. And number two, if you need to sell your property, you're going to put it on the MLS. That's the part that Melody Wright never says. She never talks about that part. Well, she may not know because she's not in the business. So it's just, pure ignorance. She doesn't know. That's not her fault. But like if you need to sell your home, you're going to put it on the MLS. So the ones that are off market are like people that aren't desperate to sell. They're just like, I'll sell it off market. Like a lot of times I've bought deals off market when I've contacted the homeowner directly, right? And the deal happens. But it's all available on public data. You can always see that on public records. So it's like 20%. But the majority are on the MLS, the majority. Or they're on Zillow, right? Listed on another type of MLS. I've seen house in Texas and Zillow priced at 170. The estimate was 46 grand. Yeah. No doubt. Yeah, this estimate can be completely incorrect sometimes. Yeah, it's not an exact science. No PSI. What's up? Good morning, Jason. You've lived in Southern California and Ohio. Yep. What made you choose living in Ohio over California? Weather, coast, culture, politics? Well, the weather in Southern California is unbelievable. Like every time I go out there, I'm like, wow, I forgot how nice it is out here, the weather. Because in a lot of the areas in Southern California, it's not, especially along the coast, it's not hot necessarily. It's like perfect, the weather. It really came down to the cost. We left, we were looking for a property to buy our first home. I had friends that worked at Countrywide. I had friends that used 0% loans, teaser rate loans, interest not 0% loans, interest only loans, negative AM loans. I had friends that used those loans to buy these houses, and I couldn't believe the houses they lived in because I was like, how the heck are you affording this? Well, they had exotic loan products. And so we're like, maybe we should buy a condo. We couldn't afford a house. So we looked at condos and they were like 600 grand. And I was like, you know what? Maybe let's look back in Ohio because my wife and I are from Ohio. And we just looked online for like 10 minutes and we're like, you know what? We're out of here. So we left and moved back to Ohio because of cost. But it wasn't because of culture or politics. It wasn't that. And I missed the weather there. I do like the weather in Ohio, though I like to change the season. But cost was just not, that didn't work. The cost structure. I've noticed that sellers that cut price sell. Everything else just sits forever. Yes, I mean, right. There's this buyer for every house. It just depends on the price. Yeah, so you're right, Edward. If the taxes continue, 40% drop. Maybe. But again, that kind of gives people a reason not to sell because they're like, well, where am I going to buy? What am I going to do? Or what am I going to do, right? Am I going to rent a place? The rents, if taxes continue, landlords are just going to keep jacking up rent. So in some cases, if you don't have a mortgage, it could make sense just to stay put. Lance Slammer just put out a newsletter yesterday saying housing inventory is up 8%. What number are you pulling from? So he's probably referencing realtor.com, I'm guessing, a national number based on the end of the end of February data. I'm using at the beginning, I usually use Redfin data. So that's what this is right here. So if you go to redfin.com, right, and their data center, and you go down to housing market data, they do a weekly housing market data summary. And this is the active listings right here. Whoops. Yeah. Down 2%, right? 1 million. There's a nuance there between how they capture listings. Some will count pending sales and contingent sales, not pending sales, contingent sales into active inventory. So realtor.com may be doing that. It's a bunch of detail that you probably don't care about, but it's just how MLSs capture different stages of the process. But I always use the Redfin data at the beginning of the videos because it's weekly. What Lance is using is monthly. I'm not saying his is wrong. They're just looking at the data a little differently. But the point is that I think you can look at his newsletter and see that the trend has been down, right? That active inventory and new listings have been down or trending down. So that's the difference. Hope that made sense. But good question. Yeah, good question. Get the government and shadow banks out of the way. Oh, shoot, man. You can't see that, can you? My bad. Look right here. I'm going to go back to Hank for a second. I want to answer this question, bro. So here, right? You can see this hopefully now. Down 2%, 1 million listings. That's what I'm looking at is Redfin. Anyway, my face was in the way, so I wanted to get that covered. All right. Get the government and shadow banks out of the way. Out of the way of so like, let's be realistic about it for a minute. It's not happening. It doesn't, I have seen no sign, zero sign that the government will get out of housing. I just don't see it happening. Do you? Honestly, I don't. I mean, I have seen no sign that they're going to get out of housing. Even if they made Fannie and Freddie public, they're still going to be involved in housing some way, right? They just are. I think that's going to continue because they know that housing makes up 13% of GDP. So they're like, we got to, we want to manipulate this as much as we can. It's really predictable in a way. Stop the extend and pretend and PIK. I don't know what that is. I'm not sure what PIK is, but extend and pretend. Yeah, I doubt they're going to do that either. I doubt they're going to stop that. I mean, they're still doing it, right? They're still doing it. Like there's a bunch of student loan people that don't have to pay right now. Still, after they were going to clamp down on student loans, even the FHA guardrails. You hear that term all the time. People, they put the FHA guardrails around, or guardrails around the FHA program and really dial that in. But what they never explain in those interviews when people have them is that they still have extend and pretend on those. You can get a workout up to 18 months every 2 years. How long is 18 months? Almost 2 years. So that's like 6 months that you are paying a mortgage? So you're still going to have extend and pretend. They still have that out there. Thank you for bringing this up, Bambi. Not sure if we should buy during record highs or wait it out. I'm scared that prices will only continue to increase, not go down. So this is especially for you. I created this over the last couple of weeks because I get this question a lot. So I wanted to add, provide some value. So I created this like little questionnaire. It's basically 5 questions. 5 questions to go through with you. And if you're buying the house with someone else, a spouse, a partner, whatever, then go through it with them. Answer 5 questions, very simple, and it will give you an understanding if you're ready to buy a house or not. Or if you're headed that direction. It's not like definitive, like, hey, if you answer these yes, then you're going to buy. But it's a guide to help you understand if you're ready to buy. And it answers a lot of what you're talking about, Bambi, like the hesitation you have. Because I get that question a lot. So that's why I put this together. If you go to, and the link is in the description below, but if you go to Jason Ferrier, my website, if you go to this website here, jasonferrier.com/free, because the guide's free, there's no cost for it. Then you can put in your email address, and then you will, you click this, send me the free guide, and then I'll do it for you, and you can see. So if you go here, put your email address in, send me the free guide, then a box pops up, very sophisticated, right? Download the home buyer guide, and then this pops up. So this pops up for you, and you're able to go through it. It's if you click this up here, or you scan this QR code on your phone, maybe, then you'll go to an unlisted YouTube video where I walk you through the guide. It's like a 5-minute video. So hopefully that helps. I encourage you to take a look at it. If you're out there trying to figure out, should you buy in 2026 or wait? I created this guide to help you with that process. There's no cost for it. Just go to jasonferrier.com/free. And that link is in my description below in this video as well. If you go to my website, you won't find this. It's like a hidden link, basically. So hopefully that gives you some ammo to decide if you should buy a house or not. But yeah, I was waiting for this question, and you answered, or you asked it, Bambi, so thank you. All right, I got some more zip codes to do. 75098. What do we got? 75098. All right, in Texas, huh? Did we already look at this one? 750. Yeah, we already looked at Wylie, Texas. Oh, I did that one. I must be behind. My bad. But here, I'll go back to you, Bambi, real quick. I should have completed this thought. So you're scared prices will only continue to increase and not go down. And your, prices are at record highs. I understand that. Go through that guide, because at the end of the day, you have to answer that for yourself if you should buy. Don't listen to a YouTuber to tell you to buy. Don't listen to a YouTuber that tells you not to buy. Like, the market's never been so toxic. Or if someone tells you they'll give you the signal on when you should buy, no way. That's a decision you have to make on your own. And I created that guide to help you. Anyway, let's go back to these zip codes. Sorry, guys. 43068. I think I did that one, didn't I? Oh, no, I didn't. That's Reynoldsburg. I did not do that one. Okay, so I'll do this. 43068. All right. Thanks for jumping on, by the way. Inventory, Reynoldsburg, Ohio, up 20%. And I'll do a few more of these, folks, before I wrap up. A few more zip codes. Active inventory compared to 2019, 35%. So you have more homes for sale than 2019. I can tell you there aren't many areas of Ohio where we're seeing that. So the fact that you have more inventory than 2019 says something, no doubt. I mean, you have 57 homes on the market right now. During COVID, you had 11. I mean, you're getting back to nearly your highest level in a decade. Year over year prices, they're still up, but that home price growth is slowing, right? 0.4% up in prices. So it's not like it's up like it was back here during COVID. It was up 20%. What? 20%? That's nuts. And it was. So it dropped. It dropped a lot, right? I mean, the price growth slowed significantly. Then you had an uptick in price growth, but now it's basically flat, but it is down if you think about it from a wage standpoint or an inflation standpoint. You're definitely values are coming down. So home prices, hopefully you're not at record highs anymore, but you may still be hanging out there at that number. $300,000 for your typical home value, 300 grand in Reynoldsburg. And let's see. It is an all-time high right now. You just crossed the 300,000 mark, right? Yeah, you just crossed it. But notice it's barely up since last year. Last year at this time, it was, 297? Now 299. I'm sorry, now 300. So you're right there. It's, I would think at some point that's going to level off completely and you may see a reversal, but not a massive change. Wouldn't think prices would completely fall apart unless you have a lot of inventory that hits the street. Unless you have a lot of inventory. So at this point, I would say if you're out there looking to buy, hunt hard, hunt off market, maybe look at some expired listings, right? Stuff that never sold last year. Have your realtor pull a list of those. Look at look through them. Ask him to call or her to call the expired listings that you like. See if the seller's willing to or the owner's willing to sell. You never know. You never know. And you may see some inventory this spring that helps drive the prices further down. Maybe. All right. That was Reynoldsburg, Ohio. Reynoldsburg, Ohio. Jay Grams. Thanks, Jay. What's up, Hank? Oh, you guys talking about prices? Okay. Can you look at Amarillo, Texas, 79118? All right. Cool picture. Kid on a motorcycle. That's awesome. 79118. We'll look at that one. Amarillo, Texas, right? What? 79118. It's not coming up. Oh, yeah, it is. 79118. Here we go. Amarillo, Texas. Inventory down year over year 25%. So fewer homes than last year. What about 2019? Down 50%. Jeez. Many areas of Texas have a lot more homes for sale, but not where you are. How's home price? What are home prices doing? Wow, look at this. Prices are only up 0.8%, essentially flat. And that growth is gone. Again, during COVID, prices were going crazy, up 18%, 17% year over year, now falling. Well, they were falling, I guess, for the last few months. And now they're up, but only up 0.8%. So very stagnant. Not doing much anymore. And your home value is $252,802. It actually is an all-time high right now. Just from that little bit of growth over the last few months. But what's your active inventory count? Let's look at that. 89 homes right now. So your inventory is falling. Look at that. Like that trend is down, like falling the wrong way. You had like all your inventory growth like kind of happened in 2024 up until 2020, February of 2025, and then inventory fell. And it's been falling almost every month. So, I mean, it could be that people have purchased the homes that were on the market over the last year. They just weren't paying, overpaying for the houses or paying more than, asking, keeping the price kind of level. And then now you're at a point in inventory where maybe you're going to see prices, maybe they'll head back up. Maybe. Probably some good amount of new builds there, I would guess. A lot of new builds in Texas, but your inventory numbers are falling the wrong direction. So unless you see that change, this spring could bring higher home prices. I mean, you are at a record high home price right now. Barely, but you are technically. Hmm. Well, that's Amarillo, Texas. That one's a weird market. Not weird. I don't want to say it's weird. The market's not weird, but it's just different, right? Just different than we've looked at as far as stats. But come back again, like through this spring. I want to know. I want to keep my eye on this market, and just because I see inventory going down, you don't see that in Texas a lot. All right, Amarillo, Texas. Cool though. Oh, you close on a home, huh? We close. Congrats, by the way. Close on a home, Chattanooga, Tennessee, 37416, $290,000, 5% down, and some good concessions on a 20, 30 square foot house, 4-bed, 2-bath. Wow, you're laying it all out here. 585 APR, 30-year fix. Been waiting for about 5 years. Cool. I mean, it's cool that you're sharing all that. I really appreciate it. It's I always like hearing people's stories. 37416. We'll look at that first. 37416. 41. Yeah. I type like someone who's never used a computer. Yes, I do. Active inventory. Okay. You have 82% more homes for sale. I mean, not that you care about this because you've already bought your home, but we'll go through it anyway. Up 11% since 2019. Only 56 houses on the market, though. Not a huge sample size, but, better than like 15 or 20 houses. And look at this, during COVID, 4. You had 4 homes on the market in February of 2022. I can see why you've been waiting, right? You probably forced to wait. Goodness gracious. All right, let's look at prices. How are they doing? Yeah, good for you. Down 1.9% year over year. And the typical home value, how are those? Typical home value came down to $283,000. It was $289,000. That's where it peaked out. So yeah, you probably, I'm just going to guess, and I could be wrong, but you probably were waiting, you had a kind of a perfect storm. You had inventory go up, you had prices start to come down, or at least level off and not go up anymore. And you had interest rates coming down. Kind of the perfect storm for you. So you found a seller who was willing to give some concessions, and it sounds like you knew what you wanted. And when you found the right house at the right price, you pulled the trigger. That's the way it should be done. Well done. Well done. Good job. All right. And you got, your rate's not horrible. It's pretty good. It's under 6%. And well done waiting, by the way, and being patient. That's worth a lot when you can be patient. The worst real estate purchases I ever made were done out of haste. Oh, buying your house with silver? Yeah, it's probably very possible. By the way, if you've ever done that, or you know somebody who has bought their house with silver or gold or Bitcoin, like actually did the transaction in those currencies or did a trade or something, send them my way. I'd love to talk to them. Historically, in 29, banks foreclosed on all homes that were underwater. Right now, you say only 40% are free and clear. That is one example of people being forced out. I don't understand that one. I mean, I don't understand how the 40% is free and clear is forced out. I mean, when I say only 40% are free and clear, that's a high number. I mean, higher than that's like a historic high. It means 40% of all homeowners don't have a mortgage at all, and the number that are actually underwater is only 2.1%. So only 2.1% of all mortgaged homeowners are underwater. So the people not selling because they need more money due to too high expectations is even more of an ominous sign than those that can't buy, as they will get squeezed on carrying cost and then capitulate. Well, I mean, most people who sell their home try to get as much as they can for it. So it's just like the market normalizing itself, I think. I don't know that it is a more ominous sign or not. It's hard. It's hard to know. But the bottom line is this all comes back to the number of homes on the market. It really does. It comes back to that. And if you've got a ton of inventory and buying demand doesn't go up, then you're going to have massive price decline, especially if banks turn off financing, which, by the way, the idea that right now banks are becoming more strict is not true, at least not in my experience. So if you hear that online, just, you can believe it if you want, but I'm telling you, somebody who works in the business every day, the people that I know that are applying for home loans aren't having a problem getting them. I mean, obviously, you have to have the right credit, you have to have the right income, but we just don't have a mechanism of forced selling. We don't have it. It is what it is. We could have it. I'm not saying that's going to remain that way, but if you look at the current data, it just doesn't show that not only the current data, but all you'd be able to find a house for like nothing right now if there was a massive amount of forced selling. So I use a lot of your input as evidence that there's not a lot of forced selling. Oil, gas prices may do it. Maybe. It could be. Yeah, they've gotten higher, right? In '08, Vegas banks called the notes of homes that were refied at the peak, but then they sank 25% and the notes were worth more than the house. The bank had too much risk. Yeah, the weird thing is about foreclosures is that El Snappatan. Is that how you say that? The banks don't want foreclosures overall. Like, they don't have the capacity to deal with them. They have to hire people just to deal with foreclosures. Because if you have a foreclosure, if it's a bank-owned property, you have to either pay a management company to make sure the property is maintained, or you got to pay somebody on your staff to do it. And then you have to have somebody to actually deal with the foreclosures. So most banks will do what they can to keep, lenders and banks will do what they can to keep people in their houses, because they would rather have the person in their house than have to deal with the asset in most cases, according to the people I know in mortgage. Even Melody Wright agrees with that. But more so, 85% of all mortgages are owned or backed up by the U.S. government now, versus in 2006 and 7 and 8, 9, 10, where a fraction of the mortgages were backed up by the U.S. government with the explicit guarantee. So now that the government is explicitly guaranteed 85% of all mortgages out there, it's like, man, what do you think is going to happen if they get really bad? They'll extend and pretend, do whatever they have to do. I mean, they know the formula now. They know how to game the system. So if that time comes, my guess is they're just going to do the same thing again. My children are all grown, and I'm locked into a rate that's so low, 2.25%. Oh my gosh. I would like to downsize, but just not worth it. Hustler, I think there are millions of people like you. And this is the brutal, boring truth of our housing market, folks. What you're seeing right here. And thank you, Hustler, for chiming in. My children are all grown, and I'm locked into a rate that's so low. 2.25% is like, that's like an asset by itself. I mean, that to have a rate on a mortgage like that is crazy. On an asset is nuts. This right here is why the market is broken. It's not your fault, obviously. I would do the same thing if I were you, but that's why nobody's selling. It doesn't make sense to sell. You're going to pay more in rent, probably, for a comparable house. Definitely going to pay more for a house. You're going to pay a higher interest rate. What's the advantage? What's the upside? There isn't one. So there's no mechanism. There's no incentive to sell. And, you'll see headlines like, this is changing. The golden handcuffs are coming off. Yeah, well, I know that that's what the headlines say. But the reality is that most people in this situation aren't going to sell. And that could go on for years. I mean, Hustler, I don't know him very well, obviously. But for all I know, he could stay and die in that house. Right? It could happen. He'll never hit the market. Why would it? I mean, that 2.25, wow, hang on to that. It's a great rate. Dustin, how you doing? Houses are far too high, and interest rate is too high. That is all. The oil prices have nothing to do with this. That is all the oil price. Oh, that is all. Oil prices have nothing to do with this. Yeah. I mean, it's more expense, I guess. Oil prices, right, make everything more expensive. So maybe that. But again, you have to ask yourself, like, I'm not saying this is you, but the people that are like, hey, it's just because, student loans or AI or black swans or whatever are going to cause people to, cause the housing market to crash. Again, you have to ask yourself, what's the mechanism of why they would sell? There has to be a reason. Even if expenses go up, it almost like makes it more difficult for home prices to crash, because if expenses go up, people are like, I'm not going to move. I'm not going to list my house. That's why they sell them for cash after the PMI insurance covers the loan. Oh, you're talking about banks? Maybe. A lot were ARM loans, a lot were interest-only loans or choose your own rate or negative AM loans where the payment you're making is not even enough to cover the interest. Now all those loans are illegal. And that's, by the way, that's my biggest gripe with like the narrative and the parroting that people have about the prime borrower in 2008 caused the housing crash. True, but they were using products that are illegal now. You can't even use those products anymore. They're not even available. You can't use interest-only loan. Go get one from a bank. You can't do it on a 30-year mortgage. So the prime borrowers, the conventional borrowers, had a big part in the housing crash in 2008, but they were using loans you can't even get now. I mean, my buddies in Southern California that I had that went BK and left the country in 2008 when the housing crash happened, well, they all had negative AM loans, and they those things all reset. So we're talking about a housing payment going from like $1,000 to $3,000, not $1,000 to $1,500, $1,000 to $3,000. Can't pay it, gone. Plus, they had no equity. So that was the other thing. High rates, not problem. It's cost, period. Yeah. I mean, a lot of people feel that way, Tammy, no doubt. Never do an ARM. Well, I can't say never do an ARM, but you got to be really careful. I never say never. I feel like with the loan products, there may be a reason to use them. Just depends who you are, what your situation is. But generally speaking, don't do an ARM. Market crash. Talking about the stock market crash, that's possible, right? You get a bunch of people in, I mean, I think that's localized, right? There are areas of the U.S. where there's a lot more people invested in the stock market, but not the majority of Americans. I think it's like only like 2 out of 10 or something are invested in the stock market. I mean, I'm surprised we haven't seen more fallout from Bitcoin. Bitcoin's fallen a lot. It's off half, right? It was at 128. Now it's 70,000 or something like that. So not quite half, but almost. It's like, boy. Oh, sure. Yeah. If you put your request in there. Yeah. If you want to just talk one-on-one, if somebody's out there and they want to talk one-on-one about their housing situation, even if you're in a different state, I'll give you the info I can, or give you my take. You can contact me if there's an email below. You can go to my website and fill out the form, and tell me what's going on. That gives me some idea of what's happening. 6% on 400,000 and 3K is a massive difference, Tammy. Oh, yeah, you're talking about something else. Why is there an ad on the live? I don't know if that's YouTube. That's what they do. Actually, I turned them down to like the lowest level they go. So, like, you have a choice as a creator. You can go like low, medium, or high. I went to low. So it means I don't make as much money on the lives, but that's just a part of YouTube. Let me see. You guys are just talking back and forth, which is cool. Ad housing, or people would sell for layoff, general financial hardship to lock up lump sums of cash, or end of life care needs. Yeah, no doubt. There's going to be that. That happens. You get older, everybody does, everybody dies. So, and people get laid off. So all those things are true. They can all happen and be a reason to sell your property. You're right. That's why like the whole off MLS thing to me is like just a nothing burger, because if you have to sell your home, you're going to put it on the MLS. You're going to. Oh, yeah, that's a great point. 60% of the country does have a 401k. I just read that yesterday, I think. I read that there were like more, like we set a record for how many millionaires there are through their 401k right now. And the group that's growing the most or has the most money, the highest number of millionaires is Gen X. So I was like, hey, good job, Gen X. But you're right. People look at their 401k, and if it's gone down by like 30%, they feel poor, right? Even if they're not doing anything with the money. Just like their Zestimate, they feel poor, right? If their Zestimate goes down. So that could be something that's happening. It can also keep people from buying homes, right? Maybe that'll happen too. I love your comments. One thing I never hear anyone talk about is the speed of information now. We didn't have social media. If homes start dropping meaningfully, the capitulation, I can never say that word, capitulation will be instant. That's a great point. Yeah, we didn't have social media then. I also wonder, though, if we become desensitized, or we became desensitized to it, to information, because we get so much of it. Tammy likes silver and gold. Yeah, a lot of people do, right? That they've done pretty well recently. There's no doubt. They've done pretty well. Okay. Let me see if I get anything else on my list. I guess the only other thing is, what's up, Gen X? Yeah, there you go. All right. Let me go to this thing. All right. To end this live, and if you have another housing market you want me to look at, please just drop it in the comments, or join us on the next live. I'll do it next Thursday or next Friday, depending on client needs and what's happening. But if you go to this site here, this is my website. I've got this linked in the description below, but it's jasonferrier.com/free. And I've got a free home buyer guide. Basically, it's not a total guide, but it's a document to help you decide if you should buy a house or not, or if you're ready to buy a house. So all you have to do is plug in your information here, and then you download this, and there's a QR code here to scan, and you'll be able to, there's a video where I walk you through this, but it's the question every first-time buyer has. Even if you're not a first-time buyer, you usually have it. So it's, should I buy in 2026 or wait? And the top basically says it all. Stop going by headlines, stop guessing, answer these 5 honest questions, and you'll know exactly where you stand and what your smartest move is right now. So if you're honest with yourself, you go through those, it kind of gives you an idea. All right, am I moving in the right direction or not? Obviously, it's not all knowing because I don't know everybody's situation, but it's I put it together based on, my experience as a realtor and what I've seen people do and the mistakes they've made, buying too early, or staying on the sidelines forever. Like there are people that I know that I talked to before prices went up in 2019, and they were like, "No, I'm not going to buy because I think the market's going to crash. I'm just scared about that," which is completely normal to be scared about that. But then look what happened to prices. Now nobody could predict COVID, but they were going up then. And I told them, I said, "Hey, just look at your market and understand what's happening with inventory and prices, and then you'll be able to see what's occurring. You can't predict the future, but you can try to put yourself in a position where you're making a decision with confidence. And that's what this is for. All right. So that's my little plug at the end. See if there's any other questions, and then I'm out. Rates are down from 2023. Transactions should be up. They aren't, full stop. Yeah, there's just nothing to buy, man. That's one of the biggest things out there. It's like a vicious circle. It's like a vicious circle. People are like, I'm not going to sell because I don't have anywhere to go. So that inventory never hits the street. And then the first-time home buyer is like, well, there's no inventory. And builders aren't building enough. They're just not. We're building fewer and fewer homes every year, and they're too big. They're not building 1950 starter homes anymore. They're building 4,000 square foot homes. So it's just there's no transactions because people are locked in. I mean, you got the guy earlier locked into his 2.25% rate. Hank, if that was in 2018 and he had a 5 or 6% rate and prices were only going up 3 or 4% a year, that dude probably would have sold, right? Our buddy with the 2.5% rate. He probably would have sold and downsized because he doesn't need his house right now. But that's not what happened. He got a low rate. The Fed broke the housing market. And now everything's locked up. I mean, locked down like Gary Payton, right? Gary Payton, the glove. Yeah, nothing to buy. It's not like there's nothing to buy. It's not like, there are no houses. And in some markets, there's a lot more inventory. Certainly. Like we didn't look at many today. But like Florida, a lot of parts of Texas, parts of the Sunbelt states, a lot more inventory. But in the majority of the country, no. And a lot of the inventory that's out there is not good. It's like complete rehabs, old homes, maybe luxury homes. Maybe they're overpriced. We need old folk one story with garage. Yeah, like there's a lot of them here in Central Ohio, like 1,000 square foot, 3-bedroom, 1-bath ranch. The problem is most people I work with or I talk to that are first-time home buyers don't want a 3-bedroom, 1-bath, a 2-bedroom, 1-bath, 1,000 square foot house that was built in 1950. They want a newer home. So they're unwilling to buy that. That's what an investor usually buys it because it makes a grand rental. But if they were willing to buy a smaller house, it'd be a lot easier to afford, right? And then builders may build them, but builders right now don't want to build them. True. Inventory is down like 17% from pre-pandemic, but you have to look at the type of inventory that's out there. And that 17% makes a big difference. But in some markets, it's much worse. Like, here, let's show you this. This will blow your mind. Before I get off, I'll show you this. Hank, this is nuts. I should have done this earlier, but I kind of got ahead of myself. But if you look at a state inventory, and you mentioned since 2019, look at this. The brown states are down. These are the states that, let me just take your thing off. But I'm going to answer your question or respond to your comment, whatever, however you want to call it. The brown states have fewer homes for sale than 2019. So look at this. You've got Florida right now compared to 2019. Florida inventory is only up 4.4%. That's it. Texas is up 28%. Wow. Tennessee, Colorado, Arizona, Utah, Idaho, Washington State, Nebraska. What about Alaska's down, but Hawaii's probably up. Hawaii is down. Okay. So just those states, right? These green states, these are the only ones that have more homes for sale than 2019, state-wise. Now, if I look at a county look, right? If I look at a county look, remember brown is down, green is up. Look at how this map populates. So it's true that 17%, that we're only 17% under 2019 levels. But it's very localized, like real estate is. Look at the Northeast and the Midwest. I mean, if you're listening to somebody who says the Northeast is joining the party, turning around, tons of inventory, distress is building, like they must be looking at Northeast like Russia or something. Because look at this, in the northeastern part of the U.S., dang near every county except, what's this, Nantucket and Queens and Bronx. Every county beyond that, down in the Northeast in the number of homes for sale, basically, since 2019. And some of these areas, Hank, are completely gone with the number of homes. And this is a big population center, right? Like, look at some of these markets. Bergen County, I think that's New Jersey, down 70% since 2019. Ocean County, New Jersey, down 65%. I mean, up in northern, New York State County, Oswego County, 65% fewer homes for sale. Wayne County, 70%. Now, the Northeast, right? As you go into the Midwest, it's a little green showing up. You get some green, like in Ohio. So, you've got some areas like, there's a few, like Pickaway County, Vinton, Hawking, Allen County in Ohio. Those all have fewer homes for sale than 2019. I'm sorry, more homes for sale than 2019, but all the brown still down. Brown is down. And then even the eastern seaboard down, right? Then as I go into the southeast, look what happens. And I'm not trying to pick on you at all. And I know we're just going back and forth here, but hopefully this kind of gives you a picture of the inventory of what's happening. But look at the southeast. As I get south, more green popping up, right? Still some brown though, but much more green. And then as I get down to Florida specifically, look at this. And this is on a county look, but like Polk County in Florida, 40% more homes. Completely different than the Northeast. Glades County, 54% more. Charlotte County, 45% more. So definite explosions of inventory there. Then if I go into Texas, story, right? We looked at Amarillo, Texas, that had fewer homes than 2019. But then through much of Texas, you've got 60% in Guadalupe County, I'm trying to look looking for Travis County, which is Houston. They have 12% more. So not a ton, but they do have more than 2019. So the inventory is definitely growing in Texas. If I go into I guess I get lost here in this county data. Like, let me go into Tennessee and show you. So, like, Melody Wright, for instance, is in Johnson City. I think she's in. Was it Johnson City? Yeah, I believe she's here. Johnson County. Is it here? Right. Let me look. Metro. Yeah. Okay. Yeah, she has less inventory too. I thought maybe Melody Wright had more where she lives, but she has fewer homes for sale than 2019. But yeah, if you go west, then you can kind of see it's like Nye County, Nevada. They have 60% more homes for sale. Esmeralda County, Nevada, 400% more homes for sale. Here's Maricopa County. They're up 4% since 2019. And that's Phoenix. But look at California. Like, you hear all this doom and gloom about California, but their inventory is, they don't have anything hardly. I mean, look at Orange County. This is where I live. Down 50% in Orange County compared to the number of compared to 2019 and the number of homes for sale. 50% fewer homes. So that's not good. Now, if we look at this new listings, this is what's crazy. Come on. There we go. So these are the new listings, and how's that's trending kind of the same direction. East, new listings are down. Midwest, you have some growth in new listings, good. But look at this. I've noticed this going on. Florida with new listings. Like Hillsborough County, Florida, new listings down 20%. Palm Beach County, Florida, new listings down 17%. Miami-Dade County, new listings down 12%. Monroe County, Florida, new listings down 24%. So, like, if there was still a massive amount of distress in a state like Florida, all these counties would be up with new listings. You'd see them explode with people that have to sell their property. But the people were selling less than last year, not more. There are counties, you can see it, where new listings are higher. They certainly exist. But there's a lot more brown than green. Right? And if I look at prices, just to show you this look at prices by state. Blue prices are still higher than last year. And then red are where they're lower. So you could see like Ohio up 3.4%, New York up 4.2%, Pennsylvania 2.5%. But as you get down here into, like, look at North Carolina down 0.7%, Georgia down 1.9%, Florida down 5%, Texas is down 2.4% year over year. Even California is down 2% year over year. So the markets are changing. It's just taking a really long time, and some of them aren't changing much at all. Anyway, that's what's going there. Hopefully that helped. But it's pretty cool to look at it on a overview basis, right? Thanks so much for 16055. I had a Zoom meeting, and it's Oompa Loompa. Okay, got it. Like Willy Wonka. Yeah, cool movie. Was in Orange County 20 years ago. Was amazing. Yeah, the weather there is crazy, crazy nice, crazy nice. Okay, that's my live this week. I hope it was valuable. Thank you for jumping on. Like, subscribe to the Housing Nerd, and I'll see you next week. Adios.